Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is November 22nd edition of Market Outlook. So, nice correction after the down move. We were up quite a bit, 3 to 4%, depending on the index, even though markets were psychologically under pressure due to numerous terrorist attacks throughout the world. So, taking a look at the market here, we recovered the 200-day moving average, putting us back into an accumulation phase where the 50-day is still under the 200. I had pointed out earlier that rising 50-day should be a good support level. It did take hold just above there earlier in the week and rallied from there 3 to 4% depending on the index. Now, one thing to take notice is during this whole rally up, you can see the yellow line here is the 50-day moving average of volume. There was not one day last week as we rallied where the volume was greater than the 50-day moving average, or just about. So not really done on great volume. Let's take a look at a couple of the other indices. QQQ, leading stock index throughout the world. It's on all-time new highs. We basically closed there on Friday or thereabouts, very, very close to a new closing high, maybe less than a quarter or a half a percent off that. However, on a monthly basis, if we close here, it will be the highest monthly close that we've had ever. So leading NASDAQ stocks, driving this relatively thinner index in terms of total number of issues. This is 100 issues. So the top 5 are making up for the majority of the gains. But nonetheless, this index is now officially in a back to a bullish mode. You can see the 50-day moving average moved above the 200 in the last couple of days. That is a positive sign. Clearly, NASDAQ the leader. All right, let's take a look at some of the market internals here. Market indicators, what's happened? Well, last week we got oversold in just about all of our key indicators. The up-down volume, which is this upper one, we basically touched the zone where it gets to oversold, and once we close above it, that's part of a buy signal. When it's confirmed by advanced decline, which it finally was a little bit on pause, then we really are in gear. But the advanced declines, as I mentioned, breadth is narrower and narrower. So in essence, we're not surprised to see the breadth lag. Now the McClellan oscillator, which looks out about 2 to 3 weeks, also got to an oversold condition and rallied back up just one day off the low to generate a buy signal. So 2 out of our 3 market internal indicators are pointing to positive. So looking, not looking overbought certainly on this one. However, let's take a look at the volatility ratio. This is more sentiment driven, and you can see the red line here is hitting above the 1.2 level. So it's starting to run rich, but it can hold above there, and we really need to see a turn down. So are we starting to run rich? Absolutely, but nonetheless, there's probably some more to go on the upside. However, if we do start turning down, we are at a level which would indicate this that 3-4% rise last week would be under pressure. All right, let's take a look at a couple of other things here. We went through the NASDAQ, we went through the S&P. Let's take a look at Russia, RSX. I mentioned that in the text, and very interesting because, as you can see, Russia, right, we had this huge, massive sell-off, Russia in trouble, certainly with the West invading the Ukraine, or Crimea, and essentially put lots of pressure and liquidation from the West, and that affected the Russian stock market. However, as you can see, what we've done here, we've gone into a recovery phase, tested it in the last week or week and a half or so, and now are sitting right at the 200-day moving average. So you could look at this whole pattern and maybe ascertain that this is a potential bottoming pattern. What is most important to stay cognizant of is the weekly chart here. Because interesting, the 200-day and the 65-week and that sideways compression, if we can get above 1830 level, you might have a real bottom in place in this Russian ETF. So we're going to pay close attention to this. As Russia now enters the world stage as a seemingly more legitimate player, that is definitely interesting. And just to go back here, looking at volume, take a look at this here. Compared to the volume that we saw in the S&P, you can see we've had a number of days where the 50-day moving average of volume was penetrated. So there's some real interest here, a shift here in volume. As we've moved up above the 200 and sort of bounced off of that, the 50-day, even though we're now in what I would call in between a recovery and an accumulation phase, this is important to watch. Again, if we can clear these recent highs, which also coincides with the 65-week moving average, we can have a real change in trend. So RSX, definitely keep in your sights. So overall, as you can see, markets are working their way in a mixed fashion. Let's take one last look at a U.S. index, IWM, and you can see that this one is strongly lagging, right? It was up last week, but again, barely attacking the highs put in on that rally. Not really good volume, and definitely under pressure. It would be really nice to see this above the 121 level, which is the 200-day moving average. But again, this broad-based index is putting more question marks into the overall market rally here. So what's interesting is you only have 2 or 3 sectors that have positive momentum in the U.S. markets, and that is a cause of concern. Like to see better participation, and again, getting a little bit rich here off of that 3 to 4% move. But nonetheless, things seem to be stabilizing a bit, and volatility net calming down. All right, well, that's it for now. Hope this helps, and see you next week.